Hello, this is Jim Ammerman, Managing Director of Wealth Planning at Fortress Wealth Management. And in this lesson, we're going to look at an example where a Roth conversion, or I should say multiple partial Roth conversions, end up increasing after-tax net worth by over $2 million. And it's pretty straightforward assumption-wise. We've got $10,000 per month spending, so $120,000 per year. Social Security for the two spouses, 33 and 30,000 when they turn 70. You've got 2 million in a brokerage account. So that's going to be this taxable asset column here and here that will have dividends, capital gains, interest, etc. The typical tax drag every year. And then 3 million in a traditional IRA or 401k. That's the tax deferred assets column here and here. So that's going to be subject to required minimum distributions when they turn 72, and they have to start pulling money out of that account, whether they want to or not. And that percentage starts out at a little under 4% and goes up every year, which will increase their taxable income each year. We have their ages here on the left, 66 and 64 this year, assuming they're both retired. So they end up living to age 97 and 95. So we're playing God here and saying that that is their long, fruitful life. And on the left, these four columns make up the base facts. So taxable assets, tax deferred, we already covered that. Tax-free is the Roth IRA and Roth 401k column. We're assuming these base facts, they do not have either of those. And the total of these three columns equal this total portfolio assets column. You see that's growing over time. They end up with over 10 million. So good job saving, and they did not spend very much. So their beneficiaries' kids will be very excited about that. On the Roth conversion scenario, we have the same four columns, but notice the tax-free assets column has some growth there. 300,000 is moving from the tax deferred assets. So that's the traditional IRA or traditional 401k. We've converted that to Roth, or we should say that we've relabeled part of it as a Roth. We're not really changing the underlying investments. The following year, we're doing another 300,000 of relabeling, and again. So after 5 of these $300,000 conversions, we're up to almost 2 million, and that's growing at 5.12%. I believe all these columns are growing at 5.12% as the default. And then the portfolio assets grow as a result to 11.427 million. Notice that that is higher than the base case at 10.3 million. It's about $1.1 million higher. So that's a nice bump that we've seen due to these Roth conversions and the tax-free growth. It is not a higher total early on because we're prepaying the taxes with each one of these conversions. That pays off in the long run because this tax-free growth is better for your portfolio than the tax drag you have here in the brokerage account and the RMD taxes that are going to be higher on the left side with this higher tax deferred balance. So not only do we have the 1.1 million increase, but of this total balance, 6.4 million is in a Roth, and that's worth a lot more than having money in the tax deferred column, which is going to be taxable to the beneficiaries, to the kids when they inherit it. And these taxable assets will be taxed also if there's no step up in basis in the future. Now, right now we have that step up benefit, but that could go away. They've talked about getting rid of that earlier this year. And over here on the left in the base facts, 2.6 million, that will be taxable to the beneficiaries, to the kids. They can spread it out over 10 years, but it's still could be a significant tax liability if the kids are in high tax brackets at that point in time. So there's a additional benefit to having this large Roth balance, which you could use for large unexpected expenses, long-term care, vacations, buying homes for the kids, et cetera, with no tax consequences. So I think it's easy to say that there's at least $2 million of upside in after-tax net worth in this scenario. And if you have any questions on this situation, want to understand how we came up with these numbers, the Roth conversions are not going to end up in real life being just a straight 300 every year. Ideally, you've got a CPA who's experienced with the best financial planning software, working with your tax preparer CPA to find the optimal ideal amount to convert each and every year. That will increase the upside in your net worth even more, and provide even more benefit to the family. So, as I said, if you have any questions, feel free to send me an email, or if you would like a free customized assessment on your particular situation to see if Roth conversions could provide significant benefit to your family, which is typically the case, go ahead and send me an email, jim@fortress-wealth.com. And thank you very much for your time.